Welcome, ladies and gentlemen. Now, I've got a little bit of a technical difficulty. Things aren't working the way they should be on my live stream. Now, can you please let me know if everything is smooth? Are we moving nicely? Do I look a little bit laggard in some way, shape, or form? I can't tell unless you guys tell me. Well, it is Martin Luther King Day and the markets ain't really doing much. Should I have gone live today? Maybe, maybe not. But it seems like things are a little bit slow on my end. So can you please tell me if I do look somewhat kind of smooth with the camera? Forget the dress sense, ladies and gentlemen. That's always up with the flavor right now. Let me just make sure everything's working, man. I might need to sort something out. I'm good. Does it say I'm good? Looks great. Are we looking well? Okay, then. So it seems all synced. Happy days. All right, then. It must just be me on my end, ladies and gentlemen. I haven't got my bookmap running up or anything, but welcome back. Happy Martin Luther King to everyone in the United States. We do have a bit of a quiet session, but I thought I'd check in with you all just to see what the story is across the board, to see how you're all doing. Now, I've had a few articles. I don't know what the story is, but, you know, there are a couple of articles I want to talk about today. And yes, do we have this story of bearing a grudge? Now, remember, I'm not bullish. I'm not bearish. I like movement. And that's the case with cryptocurrency, okay? Now, we've had a lot of information come out straight after this ETF. Will you hear me talking about the ETF anymore? Well, it looks like the Sell the News event has actually come into fruition, ladies and gentlemen. Sell the News has happened. Now is the proof of the pudding. That's what we all like to understand. Will Bitcoin now start to work its way back up? Now, granted, the stock market is closed today, yet the futures markets are still operating, and that's usually the case. We'll know exactly where we stand with tomorrow's market open. So, in my opinion, I would be very careful trading today, to be honest with you all. It can be a little bit tricky. We just saw a nice little move up in Bitcoin, and now it's also been welcomed to a move back down again, okay? So we're going to dive into the charts, whatever way, shape, or form I can get from this. But I don't think I'm going to be seeing that much. I don't even know what's going on. Can you guys tell me if we are actually good? Because I'm not seeing this working correctly on my end, ladies and gentlemen. I just need to make sure that you guys are all good with what you can see. Can you just please give me a 1 or a 2 so that I know you guys can actually see what I'm doing, all right? Because this might be a little bit of a problem if I'm not actually able to deliver my point across. My trading view isn't working. Nothing seems to be working quite well. Check the spike on alts. I can check the spike on alts. You're all good. How am I all good? I am not seeing that. I'm lagging. Okay, someone said it. We're good, you're lagging, okay. So if everything's fine your end, I'm just going, that's the thing, guys. I can't operate. There's nothing happening on my end. YouTube's giving me a bit of trouble, but one can see you. Yeah, it doesn't look like it's a promise right here. I can't do anything on my computer. This is the crazy thing. I'm going to have to close that. Something's wrong here. FBI on the stream, you know. I'm not seeing anything. Something's going off here. You know, everything seems to be working fine before, but here we go. I'll swap this over for you just so you guys can understand exactly what the story is. Here we go. So let me just flip over the charts. There we are. All right. I don't even know if you can see it, but I can't even move my chart. I'm not running absolutely anything on here. Oh man, yeah. I've restarted my PC several times. I think there's going to be a bit of a wipeout on my computer. Something's kicking off with OBS. It keeps on working a little bit odd. But when I have my camera on, that's the problem. Okay, so, well, look, I'm going to give it to you like this, ladies and gentlemen. Yeah, I've done all of this. I've done it. I've checked. And even on my computer right now, it just keeps on buffering. So, you know, I'm pumping the algorithm. You can hear me loud and clear. Okay, that's cool. All right, then. Well, listen, look, if you can see my chart, I'm going to break it to you like this, okay? It seems like I'm going to keep this live short and sweet. All right, you froze for a minute, all good. Okay, listen, right? You've got Bitcoin that's made now this move to the downside and seems to be consolidating sideways, okay? I'm going to have to kill my camera. I think that's what the problem could be. I'm going to have to kill my camera and see if I do get any interaction with with my PC. There you go. Look at that, ladies and gentlemen. Everything seems to be working fine. Now, that's not good, man. We need the camera. We need to be seeing the flavor. We're bringing it back to the good old days, ladies and gentlemen. All right, something's brewing with my camera. I need to get that sorted out. All right, then. Cool. Are we all good now? Are we all good? So much flavor. This feels 2022. Drop the kick the cam. Yep, I'm kick the cam. All right, ladies and gentlemen. So here is the proof of it. If it is the camera, all right, then I'm going to see what we've got over here. And if I can run my bookmap, it shouldn't be a problem. That's the thing, ladies and gentlemen. So I'm going to keep this live short and sweet. All right, then. So if you are new to the channel, I normally have my face up on here. But just for the nature of demonstration, we're going to just quickly talk some charts and put things into perspective. All right, so Bitcoin, what we got? Well, let's just roll over to the daily time frame on BTC just to understand where we are. Now, look, we've had this significant piercing to the 50 EMA, and we've had the start of the week with a very sharp retrace back up above the 50 EMA. Now, for the daily time frame holders, or the guys who only look at the charts once a day and they want to make sense of what's going on, you are effectively waiting for this candle to prove as to whether or not Bitcoin has the capacity to hold or even go down lower, okay? Now, some people are now calling for the idea of Bitcoin to actually roll over. We go into some article over here, and it says that Bitcoin traders eye support at 40K as the ETF contrarian bets prove right. They said it wasn't going to be a sell the news event. It could be a sell the news event, but they are talking that this event is going to be short term. Now, we go back into the chart, and what we're looking for is effectively this candlestick right here to act as either support or confirm that they're ready to start rolling Bitcoin back to the downside. Okay, so what we need to understand is at the end of today, we will know if that's going to be the case, if Bitcoin does close below the 50 EMA, which sits at around the 42,109. Now, one thing you've got to be very careful of. You've got to be mindful of the fact that we do have quite a few bids and asks surrounding Bitcoin at specific points. So let me just bring this over to you over here. Let me just log into this bad boy right now. Happy days. And let's bring up Bitcoin's price action right here. So what have we got in front of us? Well, this is an image of the bid and the ask profile. Why is the bid and the ask very important? Because it tells us who is showing commitment to step into the chart, who has committed already into the chart, and what can we get from this based on the behavior of the auction between the bidders and the offers, okay? So bids are what we see down below here, and the offers are what we see above. So we would understand it to be sellers up here and buyers down here. Now, over the weekend, we saw Bitcoin come down into this area right here, which sits at around the 42,500 zone, and we had some significant orders being placed. We had 4.41 million traded at the 41,945, and then we also had down below, we had another 5 million in here. Go up here, we had 8 million traded in this side of this range, well, it's actually 7.59. So it shows that there has been a bit of commitment from the bid side. Now, if the market senses that there are a lot of guys stepping in on the bid, then there is a good chance that we're probably going to see Bitcoin try and attack down towards these ranges. Now, listen, remember, I am not bearish, I am not bullish. I am looking for the relationship between the bids and the asks. If I can establish the bid and the ask relationship, that gives me a better view of where Bitcoin could end up later on. Now, what have we got right here? We've got the book map. Well, the book map is showing some very interesting flavor. We've got the VWAP, where we've just had 378 Bitcoin orders smack towards the VWAP, but not take the VWAP. Now, remember, the stock market is closed, ladies and gentlemen. We don't have the boys, you know, in the ties and the suits dictating where the flavor of the marketplace is going to go. And usually that's what makes Bitcoin move, okay? We just quickly have a look at what's going on with the Bitcoin ETF itself. Flip over to that bad boy, scroll all the way down here, and we can see that the ETF itself has taken a bit of a tumbler to the downside. We're going to the smaller time frames, so you can see not much activity is happening right now, which is a sight for sore eyes. Granted, there's so much hype with this bad boy. Looks like BTC could be getting ready to roll down even more in terms of the ETF value. But listen, this is consistent. We need this. All right, we've said this before. When the ETF was going to get rolled out, always expect a retrace back down. We said this before, ladies and gentlemen. You go onto my Twitter, you'll see I posted a chart on the Ethereum ProShares Strategy ETF, and I said exactly the same thing. Does that make me an ETF genius? No, it doesn't. What I'm trying to convey to you is to have perseverance and more so try and be more cautious when you are seeing these big events happening in any asset across the board. Okay? Now, we know that cryptocurrency stocks have taken a smackaroons to the downside. We just bring this bad boy up and we can see that Mara, oh my days, Marathon's taken a bit of a, oh man, talk about swipe. And look at all this selling that's happening right here. Okay, we go and have a look at Riot. They too also got smacked. Here we go, what we got. There you go, nice little flavoursome move down. And Coinbase, given that's the one with the bigger volume or the market cap, they too have come back down to clear specific zones. Okay, so you can see money's coming out of there. Now, does it mean it's bad news? Well, it's not that it's bad news. It's pretty much the cup with handle. If you look at it from the weekly perspective, you can see we're expecting this to happen. We need the retrace. Now, as long as the retrace doesn't continue too far down, then we're going to be all good. Quite frankly, if Coinbase comes all the way down to the effectively this 70 mark, then we've got ourselves a little bit of a problem. But granted, it is a bit of a volatile stock, so we've got to take that into consideration. Okay, so just be mindful of that. This now could be the chance to start picking it up on the cheap. All right. But you've got to be very mindful. The stock market has accumulated 3 distribution days on the NASDAQ and 4 on the S&P. What does that tell you? Well, it tells you that the stock market is effectively pulling back. Now, look at today's price action on the S&P. Ain't doing nothing. It's sideways. It's dead. It's sad. All right? Do not get yourself involved in these sort of environments. Please do not do that. Okay, you're going to get thrown about. You go into the calendar and you can see that we've got ourselves a very interesting week ahead. We've got the Empire Manufacturing Index and then, of course, the unemployment claims, retail sales and what have you. And the thing that's going to be on our minds is if the economy is going to start slowing down, it will grant more on the Fed to decrease the interest rates. But the problem is some federal members are starting to come up with a bit of a hawkish sentiment saying more needs to be done. Like, hold on a second, more needs to be done. So the prospect of actually increasing the interest rates is on the cards, maybe. Well, this is what we're going to be looking into very soon. Now, something that's hit cryptocurrency, which, tell me something new. Is it the same thing? Like, look, Tether crypto token increasingly favored by money launderers. The UN warns that it's called fake romance frauds, as known as pig butchering. Now, look, just because it's what they're choosing, before it was Bitcoin, now it looks like it's Tether. All right, does it do anything to cryptocurrency? Well, no, it doesn't. It just gives them more room to try and come in and step in and say, look, let's start regulating this bad boy. But let me draw your attention to something more interesting, ladies and gentlemen. The net unrealized profit and losses of these holders in Bitcoin. What are they doing? Why should they not be taking some profits off the table? Let's have a look at where we are. Oh, no. We've now turned from belief to denial to now anxiety. You can see that the line is actually pointing lower, and we go into the key, and it gives us an understanding that psychologically, if it's a brown line pointing down, it tells us that all these Bitcoin holders are currently feeling somewhat anxious, okay? Now, how long will they feel anxious for? Well, it's all going to be based on how long Bitcoin's price continues to roll over, okay? You can see right here, as we were marking up, there was optimism, and that optimism came in for a long time, and that was when Bitcoin was around the $25,000 mark, okay? Now, if we go to Bitcoin's last high over here around the 63,000 zone, we were at the point of what? Belief, everyone's happy. Then as Bitcoin kept on coming down, the denial kicked in. And then, of course, the anxiety kicked in. And they stabilized inside of this zone before Bitcoin went into a capitulated state. Now, the question I've got for you, ladies and gentlemen, how many of you would be of the understanding that Bitcoin could end up into a capitulated state? Type 1 if you think that could be the case. That is where we could be going. I'm not bearish. I want to interact with you and understand where your heads are at. Because everyone's like, nah, Bitcoin's going down to 30K, 29, 25. All the guys are all coming out with this. I want to know where your heads are at. Do you think we could get into a capitulated state? That means where people just give up and say, you know what, I'm done with this. I'm selling up. Okay? And that's where this pink zone is. Now, if we just look back at Bitcoin over its history, all right, or the data that we have here, we've only had 1, 2, 3, 4, 5 capitulation events. Okay, there we go. Look at you. You all go mad for it. Look, you all want it. So look, there's 5 capitulation events that have come into Bitcoin. These are where Bitcoin drops down so aggressively that people can't fathom holding onto it anymore and they sell up, which happens to be the time when Bitcoin decides to make a move to the upside. Happy days. Well, what we've come from in this year, we have come from a capitulated state and we've now managed to make our way up towards a belief mechanism or thought process in net unrealized profit and losses for the Bitcoin holders, okay? Now, the problem that we've got is we've come back into this point right here and we haven't really made that much ground to the upside and we are currently stuck inside of this. Where is it? Let's go over to it. We're stuck in this 40K, 42,000 region itself, okay? Now, looking at day trading setups in principle, I don't want to encourage you guys to trade today because it is a day where we're down market behavior. And once London session closes, we're probably going to see a dry up of volume. Now, if you're going to be the kind of person that goes onto the smaller time frames and says, you know what, I'm going to take advantage of Bitcoin, baby. Yeah, man, I'm going to try and trade it. Well, let me just show you exactly what I'm talking about right here. Look at the 1 minute time frame on Bitcoin. Look at this. Very, very small activity happening in Bitcoin. We do not like to see these things right here. And you see these big pumps, these big drops, vectors. I'll be frank with you. You can exploit this purely on the principle of imbalances. So when you see a vector candle, you trade the logic of an imbalance. So I would expect Bitcoin to come back up towards this red vector candle zone. That's my logic because the market is low on volatility. Low on liquidity. So I would expect them to try and come back up into this point. Why? Because the market itself is very, very light with volume across the board. All it takes is a little order for someone to come in and then sweep Bitcoin back up again towards that vector point. So just please don't encourage this time and don't trade it right now because the markets they're not fully operating today. So just please take that into consideration. All right. We saw this article and I saw it and I thought, oh my God, what's going on here? Report of $15 billion worth of XRP was part of a failed exploit attempt. So a lot of the guys were like, yeah, man, XRP and all of that madness. But then we've also seen an article talking about the idea that XRP could end up going to $5. Now, what we've got to understand is, do I believe that XRP could go to $5? Well, for the retail holders, maybe, but XRP could end up going to $5. All right. But when you see these wild price projections of XRP going to numbers beyond, it would only be for the coins that the banks hold, the seed coins in principle. They're the ones that are going to make the flavor. Because if you're a bank and you want to transfer value, then if you've got an XRP coin that could be worth $1,000 hypothetically, well, as a bank, you want to be able to move that, but not have too much of it, but represent the value of it, if you know what I mean. So, if you've got 10 of those coins, you've got 10,000 XRP in principle. So that could be something that happens later on in the future if the seed coin does come into play and it's actually worth more than what the retail is. But what you're saying to me is if XRP is going to go to those wild price points, then all you need to do is just go pick up $100 worth, 100 XRP and you're set. Do you think they're going to make it that easy for the man to go and, proclaim his wealth by just holding 100 XRP? I don't know. But articles like this, Bitcoin speculators dump 5 billion, 5 things to know about Bitcoin in this week. Panic after Bitcoin drops towards 40,000 as traders warn that the worst may be to come. Hold on a second. Last week, it was a different story. And that's just the proof right there, ladies and gentlemen, that you cannot trust any move to the upside or to the downside. Let's go and have a look at some other assets across the board. Ethereum taking a smackaroons to the downside, and it looks like they're coming to the 800 EMA, and Ethereum's done very, very well. Now, listen, going into the open of the marketplace, you can see that they've only marked up price quite aggressively and taken out a lot of short sellers. Going into the order flow itself, I can just see with regards to Ethereum, just go change this bad boy over to Ethereum, and we've got this right here. Look, man, I got all dressed up today, man, and I can't even show you my flavor. I'm so upset about this. So this is Ethereum right now on the bid and the ask. If I just move this across, look at the relationship between the bids and the offers, all right? So bids are on the bottom right here as buys, and the offers are the sells at the top. Just by looking at this, how many of you are of the belief that you think it's going to go higher or you think it's going to go lower. Just by looking at this snapshot, all right? Logic would say you would be expecting the bids to be filled. Why? Because these are orders that are sat in the chart. There's more on the bids than there are on the offers. Now, that doesn't mean that they're not going to the offers. What it means is we're seeing people showing commitment down here, and the market in principle would want to maintain that commitment for as long as it physically can. So the idea is that if we can effectively see Ethereum come into these ranges, then the logic says that this is where lots of buyers have stepped in. And it's if they do decide to work prices lower, then what are we looking at them taking? So at 24.70, you've got 11 million as an order amount where 14% of it has been transacted. All right. So it came down there and bounced aggressively from that. So it knows it can grab commitment inside of this range. On the retrace back up, they actually managed to fill some more orders, but there were not that many offers coming into play. So most of the bids are down here where there's traders looking to get filled on longs, all right? At the same time, you've also got short sellers that may be looking to take some profits, which naturally will lead prices higher, all right? And that is what happens when you take a short. You have got your position and price is going down, and up here, you have got your margins, all right? As price goes down, you're looking to sell and get rid of your short. That means you buy it back, and buy to cover ends up leading prices back up. Now, when we see price aggressively move up, it means that you've had guys step in on longs who have been liquidated on their shorts and hoping to take advantage of the move back to the upside again. So it's this area here that we're looking for price to start picking up steam. How do we understand that that could be the case? Well, the best way for you to look at it is when you look at a W formation. All right. So here's an example. Take a W formation and use the W formation to gauge the idea as to whether or not people are getting trapped in shorts and their margins are being attacked, which means forcing them into liquidation. You really want to be paying attention to this zone right here on the structure. Okay. And the reason being is because if it can come back down from the previous peak right here, on the W formation, if it can come back into that point, the logic says that momentum is going to build up to start seeing price break away from this point, okay? So just take this structure that you've got of this W formation and go and marry it up to any assets in the chart, all right? And just see what you can get. So here is an example right here. It's a bit of an obscured pattern, but it's something that we can take. W formation, retrace back into the moving average. It comes back down again, shifts back out, but look at the activity. Okay, it's always coming into play like that. Just look how beautiful that looks. All right. The deeper the W, the better it is, in my opinion. And as long as it can stay within the first peak, then you're all good to the upside, as long as it can sustain itself. All right. But the better place for this is when you see price dropping to the downside. So when we look at the downside move on Ethereum, we can see it's only on the 1 hour time frame. We haven't got a valid W formation. I'm not really too keen on that. Why? Because it's appearing at the highest point in the chart. Up here, you're looking at M formations. You've got an M formation right here. Drop, retrace, level 1. That's what the logic would suggest by the principle of the cycle. All right. So what do we mean by the cycle? Well, this is what happens in crypto. This is what happens in Forex. You get a W formation, rise up, retrace level 1, rise, retrace level 2, rise, retrace level 3, peak formation, drop level 1, drop level 2, drop level 3, peak formation. You start your trading week by identifying where you could be with this cycle. It will make life so much easier for you to trade. So even if I were to just take this logic right here and move this structure, where is it? Here we go. Move this. That is exactly where we are right now on what would appear to be a cyclical move. Funnily enough, that happens to be where the W formation was that we drew off earlier on. Take it with the pinch of salt. Don't be so static with the drawing, but it's an understanding of where you could end up being, because in crypto, in Forex, the hardest and the most simplest concept to understand in the hybrid system is the formation of the cycles. If you know where you are with the cycles, ladies and gentlemen, it doesn't matter what you do. If you use the right risk management, your position will follow that cycle if you believe you've caught the cycle at the right way. Okay? Cool. What's going on in here in this chat? Welcome, ladies and gentlemen. Listen, I'm normally do my lives with a camera, okay? So you normally can see my face, but you have been blessed today without looking at my face, and we get a full screen in the charts. Usually, I'm always showing my face, ladies and gentlemen, so if anybody did want to see my face, I'm really sorry, man. You ain't even get to see the chest hair. What is this guy talking about? Anyways, moving on. Let's have a look at what we've got in relation to the altcoins. Let's have a look at this bad boy. So, open interest. See? Look, the market is dead. It's sad, right? You've got literally hardly any, not many interest on open interest on shorts. Neither do you have it on longs. And when you see this sort of thing, you really got to say to yourself, should I even be bothering with this? All right? You want to be careful, because if it's very low, it means that there's not that much activity. Now, when we go over to Ethereum, you can see that you've got open interest coming in, and it's up 69%. That's quite a bit. And then you've got open interest on Ethereum right here at 0.1 right there, and that's looking pretty interesting. Now, that could be reasons, because if we just go over to this tab right here, and we actually look at what's going on with Ethereum, down below here, I've got this chart right here that shows us layer 1 net new developers on the 30-day, okay? And over the last 30 days, there has been a wild increase in Ethereum developers. Now, it has increased to 25 new developers have stepped in. Now, Ethereum always holds it with the bigger spot, with 348 developers coming on the actual base itself. Now, we've seen Avalanche will always maintain itself with new developers at 23 up there. And then, of course, we've got the Near protocol with 12 new developers. Going to Cosmos, they've got another 10 new developers. And then Ethereum Classic's got 4 new developers. And then we go down, we see Polkadot. We got -2 new developers, so they've lost a couple of developers. You've got Cardano losing developers as well. Down here, you got Internet Computer losing 12 developers. Hey, Hedra down -7 developers. And then Solana's losing 7. And then you've got Cello, whatever it is, -4. And then, of course, Stellar hasn't got any developers gained or lost, all right? So all the other guys are sitting pretty nicely right here. Horizon +2, and then, of course, Tezos is -4. But it's interesting that you've got a big amount hitting Ethereum. Now, looking at all the other tweet volume gainers of the last 24 hours, we've got Daicoin, we've got PRQ, RAD, TRX, and Dodo that have actually made some significant gains. Radcoin, just want to have a look at Radcoin because of how volatile the move is. If we just go over to that bad boy, you can see that we've made a big move to the upside, one way, shape, or form. If the market does continue to roll over, ladies and gentlemen, there's a good chance that we're going to see this asset pull back. Of course, news announcements may have induced this to continue to the upside, but just take that into consideration when you are actually looking at trading this bad boy, all right? Now, from a holder's perspective, I wouldn't know what this coin does, but just looking at it, you can see a big pump, which will naturally lead to a dump if the bigger market is going to actually fall through and continue with the move to the downside, okay? Going in the live order flow over here with Genedata, we can see, I mean, look at Bitcoin's taking a little bit of a tumble to the downside. Let's just go and have a look at BTC. There we go. It's looking kind of sad for Bitcoin, man. I mean, if anybody's in longs right now, you're probably scratching your head thinking, oh, my days. Let's just go have a look at the liquidations and look at these short players coming in. We've got 242 shorts and 16 long liquidations. Now, when we run the chart on the bigger picture, you can see that we have got still a little bit more liquidity for them to go and attack, all right? Now, we just go into the other chart and look at the heat map. It's going to help us make sense of what's actually going on. Look, where's the money gone? Where is it? There's hardly anything on the charts, which leads me to go and have a look at where we are on the monthly. Where is the liquidity in terms of the monthly? Now, if we don't have liquidity, then we've got ourselves a bit of a problem. Price is going to start navigating to where the liquidity is. Now, look at this. We have got just below 40K, 39,600. We've got some flavor down below. I think it's around $2-3 billion worth of short, long liquidations. Here we go. All right, sorry, tell a lie. I was lying. It's actually 39,500. We got $12.1 billion worth of long liquidations. All right. Now, is Bitcoin just going to simply just go down towards that point? Well, it's not. That's not the case. Remember, go back to the bid and the offers in regards to this chart right here. What they have to do, ladies and gentlemen, when the bid and the offer comes into play, this is what happens. If an influx of bids gets taken, that means it's a sweep lower. The market has to regulate and come back, because at every single price point that price goes down towards, where there is a buyer, there is a seller. And if there are too many buyers coming in, there's a thing called exhaustion, where logically we look at this and say, all right, there's a lot of exhaustion to the downside because people are selling. Well, when people are selling, it's because they're hitting the bids passively. Now, we usually see exhaustion of sales to the downside, which tells us that there's going to be a reversal back up. All right. Now, some of the order flow traders would see that. Now, if we just go over to the book map itself and pull this over, you can see that Bitcoin's broken down the VWAP itself. We zoom out to have a look at where we are in terms of where the flavor is on the actual depth of the market. Here we go. We got some interest at 41.5, gang. We got those bidders coming in to hold price. And when we zoom out, we can see that we have got a big area of support, which is why they're claiming the 40K zone to be a point of support. Now, if everybody thinks that the 40K zone is going to be a point of support, then there's a good chance that the 40K zone is not going to be a point of support. Why? Because the market will see that it can bid out quite aggressively at the 40K and transact significantly at that point, which will then force those traders to get liquidated if price continues to go down. So we've got to be very, very careful with this 40K zone itself, right? Now, sometimes what usually happens, what I've noticed on the book map itself, is when you're expecting a specific zone to be taken, such as this one down here at the 41,500, you're waiting for price to effectively get to that point. But sometimes what happens is we won't know historically when does the market engage in price memory. So when does the market say, hold on a second, there was a bunch of dudes that came in at 42,000. Those guys could be coming in again. And an example of that would be right here. Can you see this zone that I'm marking off? This is where the 42,000 zone resides. Now, if we don't see these guys over here step in at this point, then there's going to be a problem. It means that those guys aren't interested anymore. Maybe the guys down below could be a bit interested. Now, look at that. You see how Bitcoin's picking up steam to go down lower. And we've seen this red order right here, 42,200 with 123 Bitcoin orders trying to get filled. So there's a lot of activity happening. And the faster you see bigger pools of liquidity in terms of the dark red coming into the book map, it means these players are quickly trying to get bids filled in, okay? No one's really selling to the top side. Retail is selling, all right? But there are bidders coming in, picking up limit buys. Now, if you look at the top right here, I don't even know if you can see it. If you look at the top, I mean, it's picking up steam, ladies and gentlemen. Bitcoin on the one day that we need the charts to be working. My camera, why is it not working? This thing's starting to really stress me out. Please forgive me, ladies and gentlemen. I am a little bit quacked out. Yes, I am. I am batshit crazy, ladies and gentlemen. But please forgive me. If you are new to this channel, please tell me if you are new, and I'll tone it down just a little bit. Please let me know if you are new by pressing 1, and then I will change up my tone. I sound like an auctioneer. No, I ain't no auctioneer, ladies and gentlemen. I can get into the auctioneer flavor if you would like me to. And that's just all about reading the price, all right? Is it relevant for you? No, it's what I'm thinking in my mind, because I'm doing that when I'm trading the depth of market anyways, okay? I shared a video to the guys on the website, and it was for the weekly review. And what I did on this weekly review was I was talking them through my breakdown of a trade that I did on Friday, and it was the weekly wrap-up. And in the weekly wrap-up video was this one right here. And what we did on that video was we spoke about what I was doing in regards to this trading. Okay, so let me just bring it all the way over to you right here. Okay, then, cool. So right here is when I was talking about scalping for a very small amount. So this is where I started off with 2 contracts on the S&P, and I was explaining to the guys I was breaking down price in real time to trade out into this area and try and exploit a move to the upside on the S&P. All right. And I was diving into the bid and the ord and the offers, and I was literally just reading it out loud. You know what? We're going to do it right now, ladies and gentlemen. We're going to listen to this bad boy come into play right here. So I'm just going to play this one for you, just so you guys can get a little bit of flavor on this right here. So where was it? I think it was right here where I was just talking through it. So this is where I started scaling into the trade. All right, check this out. Come on. Pay close attention. Look at this. You see that? That was 137. So someone came in, right? I want to get someone to buy this from me. I want someone to take this. We are protecting this area here. Look at the 144 up there. Stay focused on this area right here. It's pushing minus 150. All right, obviously something's going off, but that's what that video was about. And I was explaining to them how I was able to just quickly take advantage of a 3-tick move, 4-tick move, net about $500 on the trade itself by understanding the bid and the order and the offers at that specific point, okay? And this is exactly what we're doing with Bitcoin right now, but we're expanding the time frame because we're looking at a bigger picture, okay? Remember, the order flow right here, we would assume that with Bitcoin, if the interest is going to come in at 42, we want to see those players step in. Look, you can see someone stepped in with 196 orders at 42,000. That could be a promise that we could assume could be an area of support for the short term. We've got to take that into consideration because we really need to see this flavor be here, okay? Now, if Bitcoin breaks down from this point, we've got the hope that the 41,400 zone could be coming into play. But then we've got another problem. And that other problem itself is the logic of the whole and half number principle. So for you guys who are looking at trading this, all right, which I do not recommend that you do right now because the markets are dead. It's a sad day. Not sad day, but I'm saying there's no volume really because the stock market is closed. What I'd like you to all do is mark off the whole and half numbers on your charts. Just take the 43,000, take the 41,000, all right? And then take the 42,000 itself. Now we are in this range right now. This is what we've got. Now, what you've got to say to yourself is this. Yes, we expect Bitcoin to try and attack this red vector candle, which it could do, all right? The only way that we could see Bitcoin doing that is if it gives us the proof that it's trying to mark up. Otherwise, this candlestick has been designed to just rip Bitcoin apart and just come away from it. We really need to see Bitcoin come back up above the 43,200 zone to be safe with that. But right now, Bitcoin's pulling back. And we're looking to see if they're trying to build shorts above the key 42,000 zone to roll price over to break down into it. The same process comes into play with the 41,000. If they mark prices down below the 42,000, we need to wait and see if price can stabilize at this point because then we could assume they could be building longs below the 42,000 to break back up and go into it again. And this is what you're going to be doing when you do mark off the whole and half numbers. So in future, don't come to the charts and look at Bitcoin in terms of candlesticks. Come to the charts and look at Bitcoin in terms of where price is. What do you think Bitcoin could be developing at specific price points? Come away from the idea of value. Bitcoin could never go to 41. Bitcoin could never go to 31. Bitcoin could never go to 30. That's the biggest load of anyway. We're going to get away from that. But the reason why I'm suggesting you try and take this on is because it allows you to see from a logical perspective on how likely price is going to either react at these points for a positive move up or react to these points for a negative move to the downside, okay? It's really, really important that you can actually take that because it makes life easier for you to understand what you're doing. So here's an example. You can see that Bitcoin at the 46,000, we were all waiting for Bitcoin to try and tap that 48, okay? And then we got that price sweep above it. Now, inside of this area here, you can see that they may have loaded up a whole ton of shorts. And if we just look at this price point right here, you can see that there's a lot of liquidity in that zone. You might look at it and think, meh, there's not that much there. Believe me, there is. There's lots of orders where they could have filled out a load of shorts to sell from the highest point, hence the aggressive move to the downside. Now, remember, some of the hybrid system traders know that when you see the red candle, green candle formation, the green candle, red candle formation at the highest point, it's consistent with orders to the downside. You see the red candle, green candle formation at the lows, it's consistent with a move to the upside. Here's one point right here, and here's one point right here, okay? As a little bit of a homework exercise for you until we meet again, go and find these points in the chart and just study what price does. Look at what it did before and then look at what it does after once you've highlighted these points in the chart, okay? And they'll give you a little bit of insight into what they could be preparing the next time you see this sort of flavor, okay? Go back and see it. Look at this one right here. This was sort of coming into play, but it wasn't at the highest point, but it was on its way, and that's where Bitcoin rolled over from that point. Keep on going, keep on going. We don't really see it anywhere else. Don't see it anywhere else. Don't see it. You could assume that, but it was a bit of a volatile move. And here's an example of one right here. You've got red candle, green candle right there. Happy days. It ended up leading to a move to the downside. Keep on going. You've got the same one right here. Green candle, red candle formation right there. Took a little bit of time, spiked up, came over, but fundamentally it came back down again. This one right here is not the same thing. Why? Because it was a blue vector, so volume was only 150% more than the last 10 candles. It wasn't 200%, which is what the green vector candle is, okay? This one right here, okay, if you can see, that one didn't work out, okay? Because it came back down. Fundamentally, it did come down, but it didn't come down for long and continued to move back up, all right? You had this one right here, which is not a red vector, no good for me. Then you had this one right here, where it come up to move back down again. Cool. So what you'll find, there's one right there. Happy days. Just take this pattern, and if you just wait for this, you will see it plays out. But it has to be at the move, for a move to the upside. The bigger the move to the upside, the more likely that this structure is going to work out. Same for when you see it move to the downside. The more prices move to the downside, the greater chance it has to come back up. Now look at this. You can see that it appeared right here. But this candlestick was a little bit choppy and it was a bit of a wild range, okay? They came down and then eventually ended up working its way back up. But if you based it on this candle structure right here, it would have been a bit more easier for you to take it. Why? Because you saw that they failed to come down lower and then they initiated the break to the upside. And then we look at it, you can see you got a nice little W formation, okay? So it's all about finding the patterns, okay, guys? Are we cool with that? Give me a hey ya, give me a hey who. All right, cool. So here we go. Rare green candle, red candle formation. Now, some of you might be looking at this thinking, okay, Tino, is that the same thing? Well, let's look at it like this. We've had the move to the downside, okay? Price has tried to go down lower, instantly reversed back up. Where are we right now in terms of the logic of the red candle or the green candle, red candle formation? The problem we've got with this candlestick is it has surpassed the previous candle and is actually closing lower than the last few candles right here. This could actually lead Bitcoin to continue down lower as a bit of a fast move away from the range. More importantly, we don't have true volume in the marketplace. So this could have been happening on a little bit of a sell order that caused the market to drop to only see Bitcoin try and come back up into it. Just be mindful of it, all right? You're only really looking for shorts if Bitcoin can trade away from the 50 EMA. But as long as it stays inside of this range, ladies and gentlemen, I would be very, very careful because Bitcoin can simply come straight back up into the red vector and end up liquidating you, okay? So what else have we got? 2 days ago, they will just grab some liquidity at the bottom. Thanks, Dennis. What do we mean by that? Load up and hold. Yes, yeah, don't worry, man. Tino, are the vectors the same as fair value gaps and single prints? Principally, they represent imbalances, okay? The vector candles just give you imbalances in the chart, but I like to look at the vector candles as a means of, they're based on the ticks, okay? They're based on how fast price transacts. Now, I know that price only transacts like this on the back of the market maker inducing retail traders to do something. When you dive into what the vector candle really is, well, you look at the bids and the offers on Ethereum, and behind a red vector candle, you will always see that there is bids coming in and swiping up the liquidity, okay? So that means that when we go to Bitcoin, let me just pull this over for you to put it into perspective, okay? BTC. Just to explain it to you. All right, then. So let's just look at this for a second. This is Bitcoin, okay? If we zoom in and we see that this is a red vector candle. We know this is a red vector candle on Bitcoin. If I go to Bitcoin, that's a red vector candle on the 1 hour time frame, okay? Looking at this, look what's been bidded. Here we have got 5.62 million, okay? That started the move to the downside, all right? But retail traders look at this and go short because that's what they're programmed to do. To run shorts when prices are dropping, because that's what you do, isn't it? You like to sell a valuable investment as low as you physically can. That's what happens, doesn't it? Yeah? If you were to sit at a table of investors and say to them, ladies and gentlemen, I have a very valuable antiques right here. I purchased it at $10 million, and they applaud you. Yes, well done. You've done fantastic there. What are you planning on selling it for? Well, you put your hand up and say, ladies and gentlemen, I'm going to go in with the best possible price. And they're thinking, oh my God, this guy's really this dude. He's going to take the market for granted. He's going to wipe them clean. I'm going to step in and sell it for $2 million. They're going to look at you and think, this guy is a clown. What a dunce. Purchased something for 10 million. Now he wants to sell it for 2 million with the prospect of selling it for a higher price. Now, I get it. But what I'm trying to convey to you is how retail traders see it. They see a red candle, they think, oh my God, Bitcoin's going down. But what they don't understand is that behind the red candlestick is bids being absorbed. So look, where are the sellers in this point? There were sales right here at 2.19 million. You got bids right here at 10,069,000, which is 2.63 million in value that's been traded at 42,630. Go up again, you got 2.63 again. Wait, where is it? There's this little area. Oh God, it does it every time. All right, so it's not that point. You got this point right here, 42,630. Go down again. It's not reading it out to me. You got 42,440. You got 3.58 order amount, and only 23% of it has been bidded. Then we go right at the bottom right here, and we've effectively got 2.2 million at 42,320. I thought this candle was a selling candle, right? So by that logic, that's why we look at the vector candle and we say to ourselves, how likely are we going to see a recovery of this candlestick, okay? Now, if we do see a recovery of the candlestick, the logic says that we expect it to recover by 50%. Okay, because where did the actual activity start? Well, we can see that the biggest order amount that came in on this red vector was up here, and that was for 5.63. So if I just go and take this and go with the red vector candle logic and get the midpoint of it, one would be of the understanding that at this point, because remember, this candle hasn't closed just yet, all right? So it could actually continue to go down lower and lower. But the logic says that when you take the midpoint of it, so let's just use this one for an example. Take the top side of that candle, go down to the bottom, and there's the midpoint right there. So logic says that as price came down, the guys who were bidding out at the downside effectively had trapped traders to go short. Then short covering came into play and they reversed price back up. So the guys who were in the bids effectively started to realize a return on the move to the upside. Okay, that's the same logic right here. And we would assume that at the midpoint, this is where we would expect the activity to start picking up. But when we look at this, you can see that inside of the vector, we know at the top side of that zone, that's where 5.62 million came in to bid. So the logic would be that if Bitcoin can actually surpass that point up here, if it breaks up towards that zone, retraces back in towards that last bid, then we assume at 42,737 that there's going to be interest in the market to bid price from that point again. So imagine it's a people queuing up, effectively saying, right, I'm going to step in at this point. No, I'm going to step in at the next point. No, I'm going to step at this point, which is why you see on the book map where you have got different amounts of orders coming into play. Look, so we were looking at this area down here, okay? So these guys over here really need to start showing promise of holding price at this point. Otherwise, if they can't sustain this point, Bitcoin's going to flush all the way down and try and take this liquidity, all right? Now, granted, that's what we're seeing right now. They could be coming in right here. They could be stepping in at the 42,200 and not wait until Bitcoin goes down to 42,000. They could be coming in right now. And we can see that the orders are looking like they want to step in, but they haven't been transacted just yet because that's at 42,200. So they're placing orders right here. At the same time, these orders could be fake as well. They could be making people believe that there's interest and support right there. So that could induce bids to step in and then they disappear and then they get crushed and price goes all the way down again. All right? Sounds like a crazy thing, ladies and gentlemen, but this is how, if you can effectively understand the flow of liquidity, all right, then you will find that things repeat themselves, okay? Like this guy, what he say? It's the same thing repeated over and over again in the market. That's exactly what it is, okay? It does repeat itself because there's two things that happen. Someone buys, someone sells. We ain't going to conjure up some magical thing to happen in the charts. It ain't going to happen because we have buyers and we have sellers. If you have someone else sitting on the sidelines, then those guys will be the wet flannels just waiting, not doing anything, sitting on the fence. Okay? So I'm glad I made your day a little bit better. Okay? When Blue Oyster Club... Well, what does that mean? When does the Blue Oyster Club mean? Do market makers work 8-hour shifts? That might show. They changed the market maker at US Open. No, it's not that they work shifts, ladies and gentlemen. Here we go. Look, focus on this area here. I'm going to pull up the... Here we go. Bids are coming in, right? Look. So, look at that. Yeah, the red vector's getting a little bit aggressive right now. So, let's just quickly look at Bitcoin's price. Oh, my days. All right, then. So there's Bitcoin's price on the left, okay? Look at the orders. We need to see the bids coming in. Can you see it says plus 25, plus 27? That means plus 32. That means bids are coming in, all right? Now, in 6 minutes, this candlestick is going to stop, all right? And a new candlestick is going to come into play. Now, we've got a bit of a problem because the daily open is in sight. And that's logically where the next point of interest could be, okay? So we've just got to say to ourselves, how likely is Bitcoin going to go into that zone? Well, just look, the markets are dead, bro. You don't have the stock market open, and Bitcoin is free to do whatever it wants. Okay? So you've got to say to yourself, right, do I want to get involved in this? Well, you need to say, hold on, what's the market maker trying to make the retail trader think? He's making them go short right now. So we've got to be very careful. If we're going into the idea that the bids are going to come into play at this point, then anyone that's going short right now could be getting ready to get liquidated because the candlestick could snap back up. They could recover some of the red vector and then continue back down again. Okay? Yes, market makers program bots. They create computer software programs to release liquidity and marry it up to orders that are placed by the good old retail trader. Okay? That's what they do. They do not sit, right, at the charts and do this stuff. They don't. They set the programs up to do it. And then at the end of the month, they'll probably look at it and say, what we got going off here, ladies and gentlemen? Okay, we've got this story. I mean, if we actually go back into the time when price was continuously going up and there were market makers that were negative delta and they needed to maintain neutral delta to avoid the exposure of risk, that's when we started seeing Bitcoin's price going up because they were picking up spot Bitcoin. All right, because so many people were shorting and they were effectively negative delta. They needed to be neutral just to offset themselves. So that's the only time when a market maker would step in if he's actually compromising himself in terms of risk based on the amount of liquidity he has given out by leverage towards leverage traders. That's usually what happens. If you remember, we spoke about this quite some time ago. Okay. Look, can we have a market maker name and hours of work to study how market maker behaves on each market maker? It's easily done, my friend. Asian session, the European session, the US session. Don't go too deeply into what the market maker does and be worried about what tea he has and how strong his coffee is or what time of day this brother is sleeping. The only thing we need to pay attention to when it comes to the market maker is by looking at the order flow and the candlesticks, because the candlesticks are the true representation of his behavior. Why? Because he's only manipulating players like ourselves. Look, everyone's going now, Bitcoin's going to take a dump. Everyone's shorting Bitcoin. No, you guys shouldn't be shorting Bitcoin just yet. The reason being is because this candlestick can then lead to a little bit of a recovery back up. And the logic says that if you do get a candlestick like this, always wait for the retrace, okay? Because look, it's continuously going down right now, all right? The logic says that you want to see at least a move down, a slight retrace to come away from the logic of this play right here, shake out some liquidations, and then resume the continuation lower. By you taking advantage of price going down right now, especially when we're getting so close towards the close of a candle, you're setting yourself up for a reversal back up. How much of a reversal is a different story, all right? But logic says that when you look, see, here's an example here. Look at these candlesticks, all right? Go and study another exercise for you. Go and study all of these candlesticks that are vector candles. Look at the candlesticks and say to yourself, when you see a wick, that was a candle that was previously fully red. Traders were trapped in shorts. They bought it all the way back up, all right? And they shook out those retail traders. They came down again because they knew there were loads of guys stepping in to go short on the backs of traders running on the bids, okay? Because bids being filled, in essence, is sellers stepping in. Look at how many guys got bidded out at this price point. 3.14, bidded at 42.75. Look at these guys, 7.59. On the backs of traders selling. These guys were buying, okay? Looking at the price right now, we go into the chart and we can see that we just swept down here 2.05 million order amount, and only 13% was it transacted, all right? So it might be that there's some bids in here trying to support price. So logic would say we would expect a little bit of a recovery back up. We've got 2 minutes. I'm going to ride this one till the 2 minutes are up, all right? Just to give you the example of this vector candle recovery principle. So we're going to assume that Bitcoin holds out right now. We take the top side of the candlestick, we go to the lows of the candlestick and hope that Bitcoin stays. So we've got ourselves a structure. This is the 50% of the candlestick, Okay, we know that further up, Bitcoin started to sell off from this candle range right here when they started to open it, and they transacted at 5.63. Now, if we don't see that same amount of order inside of here, we could assume that price is going to try and come back up again, because what the market's going to do is it's going to navigate and try and find that next area. That next area could be down here with 9.76 at 42,000. Are they ready to go to 42,000? They've just been marking it down for the whole hour, so we're going to naturally expect a little bit of a recovery. So here we go. We've got this area, hasn't taken down our low. We've got, what price point are we at? Here we go. We've got 1 minute and 36 seconds. So now imagine, visualize it, all right? People have now run shorts. They've gone short on Bitcoin. Want the proof of that? Let's just go and have a look at it just to see if that's going to be the case. Let's go to the levels and have a look if people are running shorts right now. Here we go. Oh, well. Good old short sellers. Here we go. 42,330. We've got some shorts right now. All right, so there's a little bit of an order right there. Okay, cool. So we know people are going short inside of that range. We're now waiting. Here we go. 1 more minute left, ladies and gentlemen. Coinbase and MicroStrategy are dumping. Well, tell me something new. Bitcoin's heading for the open. Violet Vector on the 4-hour time frame, Tino. Yes, on 4-hour time frame. That's fine. Just park that. Okay? Park that for a second. Take what I'm saying about this, because you are guaranteed to see this same thing happening over and over again. Just monitor what's going on right now. Pay attention to how fast it moves down, how fast it moves back up, because you are actively witnessing the bids coming into play to hold price. Here we go. Look, we got some players stepping in right now. This is our zone. This could be the makeup for a recovery of the vector. And if they do not come in, here we go. Look, hasn't taken it just yet. Hasn't gone down. We've got to be careful. And if we do not see the commitment of the bids coming in at this point, Bitcoin will just collapse, okay? That's what we're looking for. We're looking for this flavor right here, okay? And if we don't get it, ladies and gentlemen, we're going to have ourselves a bit of a problem. It means that these guys right here on the left, they're not showing commitment, which then tells us that the boys down here at 41.4 could be coming into play. Here we go, look. Here we go. So the candle has now formed, all right? They weren't able to break it down. The logic says that we naturally anticipate players to start marking price up to trigger the sell orders to start marking price up again. Look at the imbalance. It's minus 14% up there. So we're waiting for them to start marking it up, because lots of traders now have gone short. So if the market's ready to reverse back up and hit those liquidations, we would naturally expect price to recover this candlestick. We would naturally expect them to find a little bit of a resistance towards the midpoint of that candlestick. And if they're not done with this, then they will continue to roll price over. Okay, so that's what you got to be mindful of. This is a big drop to the downside for Bitcoin on the 1-hour time frame. So it's a huge imbalance. So logic says we expect it to try and recover some of that imbalance. And if you're going to try and take advantage of that, you've got to be mindful, because there are key areas in the chart below. We know there are orders stacked below for them to come and engage on it. What we need to see happening is offers coming in. See, I'm not seeing the offers. Up there was 2.16 traded at 42,400. We need to start seeing the offers coming in at this point to justify if they are going to try and recover the vector, okay? So price needs to hold out inside of this zone. Go to the 30-minute time frame to make sense of that logic. Let's see if that's going to be the case. Do we have any offers coming in? Here we go. Well, we got something there. We got two. That's the same order right there. No one's really stepping in just yet. I'm not seeing the orders coming. Go to the 15-minute time frame. Move across. Let's have a look closer. Do we see anything? Seems like they're holding it. Come on, give me that. Here we go. So we've got an order right there. Here we go. 42,000. That's just been placed 37 seconds ago. So we can assume that price is going to try and make its way up to the 42,305, where they can transact at 2.44 million on the sell side. All right. So we expect them to go back up, which is in line with the vector candle recovery. 42,300 will take us all the way up towards this point right here. Okay. So cool. This is where the retail trader has now gone short. Market maker is now going to hit his liquidation and mark Bitcoin's price back up again before he then tries to continue with the move back down again. I'm talking you through order flow in real time, okay? But it's the practice, it's the thought process that you put into it that will help you understand if now's the time to go short, if now's the time to go long, all right? If this move to the downside is designed to break Bitcoin down, they will recover up and then price will start to destabilize at the same spot that they initially started the move to the downside, where they will trigger the bids again to start marking price lower and then work the next ranges. Okay? Does that make sense, ladies and gentlemen? All right? And if you're going to scalp this flare, this is what I do when I scalp the S&P. The S&P does this all the bloody time. And when I'm only looking for certain ticks on the S&P, when I'm looking for like 4 or 5 ticks, all right, on 15 lot sizes, bruv, that's all I need. All right, 15 ticks, 4 or 5 ticks on 15 lots is roughly around $2,000-$3,000. 4 ticks, man. I'm not interested in a moonshot. I'm interested in just scalping the life out of the marketplace, okay? Now, this is a strong candle open. They haven't been able to surpass it lower. This is contextually the makeup of the idea of a vector candle recovery. Now, if you're going to trade the logic of it going all the way back up to the 42,525, be prepared for volatility. They could bring it all the way back down, wick, and then come back up, and they could do it later on. But if you manage to take advantage of it beforehand, and it actually does work in your favor, congratulations, all right? Play the game. Play the game, ladies and gentlemen. Ladies and gentlemen, please forgive me. I am no longer present in the chart. You cannot see me because there's something wrong with my camera. I think I just need to update my camera. It's just a bit tricky. I think I know what the problem is. So that's where I'm at. Yes. Okay. All right. Listen, ladies and gentlemen, I hope that makes sense to you all. If you are new to the channel, be sure to like and subscribe. I'll be checking in with you all later on. Have a wonderful Martin Luther King Day. Make sure you're chilling out with your families. And I'll be checking in with you all later on tonight. All right. Take care of yourselves, family. Mad love and respect. Peace.